But wait. So the Nigerian government has been asked to stop Binance operations in the country, and that's by the Association of Bureau de Change Operators of Nigeria, that's ABCON. This came after the association named Binance as one of the main things pressuring the Naira. The News Agency of Nigeria reports that Alhaji Aminu Gwadabe, who is the president of ABCON, offered this counsel during a Tuesday interview in Lagos. So the Naira to the dollar exchange rate fell to as low as 910 to the American greenback on the parallel market. On Wednesday, operators started rates as high as 910 to the dollar, continuing to point to increased demand as the primary cause. In the first 9 days of August, the Naira's value on the black market has now fallen by as much as 4.39%. Financial Derivatives Company Ltd has released its latest economic bulletin. In this report, they have projected a further increase in Nigeria's headline inflation to 23.35%. from 22.79% in June. That report also projected food inflation to rise to 25.58% for the month just behind us. Clement Izu is the head of research at FDC, and he just been out to discuss the exchange rate and its connection to inflation. Good to have you, Chika. Morning.
My pleasure.
Great. This is this story around, explain the recent sharp decline in Naira's exchange rate to 910. How did we get to this point?
Yeah, it didn't come as a surprise because after the somewhat unification of the rates in the FX market, especially the official windows, we had warned that except we do the needful, except we deal with the fundamentals, we're going to go back to where we're coming from. If you look at from 1960 till date, we've used several different exchange rate management systems, and we also have the same problem. Why? Because exchange rate is a number, is a price variable. That number is stochastic, it can be any number. And so the most important thing is the dynamics. How do we get to that number? How is that number formed? How is that number determined? And that's the demand and supply dynamics.
We want demand and supply, and so we have it. Market forces.
Yeah.
This is what market forces do to you.
Yeah.
Yes or no?
Of course, and then that's where so much is required in order for you to be where you want to be. Number one, if you look at the supply side, one thing that is very key is interest rate. You can't want strong currency and at the same time have a low interest rate. The effective interest rate is even falling from the 12.15% after the MPC meeting, last meeting. Now is 9.8%. That's 1 year treasury bill. Yeah. Nobody talks about the MPR, right? 18.75%. It's effective rate that matters most.
Yes.
And this is falling. And so if the effective interest rate is falling, the cross-country interest rate differential become low for you, is disadvantaged for you, and so nobody wants to bring in his money. And also the net returns also becomes even more negative. It's been in the negative, ranging from 10 to 18% negative. And so with interest rate falling, your net return becomes even more negative, and that discourages bringing in of funds. But that is not even all that. Also, at the supply corridor is also, you discover that the dollar earnings in Nigeria is also declining. Of course, the major FX source for us is oil,
yes.
And the oil price has been very much subdued in recent time relative to last year.
Yeah, but it's not
until recently.
Yes,
until recently, this week we see it because of the supply cut fear concerns, and then we see it trading up to. But because of the global demand concerns, the China deflation issues in the US and all that, you're going to see that oil price may not even exceed 90. All right, so that is a problem.
And that's not good news.
Then that's not good news. What are the sources of FX? How do we get FX? What are we exporting to the global market?
So import and export. So if you look at 910 exchange rate, what's the potential consequences for businesses and consumers?
It's going to be a big deal for businesses, because businesses are already squeezed because of this. Now, you know that the pass-through effect of exchange rate on Nigerian economy is about 83%. Year on year, exchange rate has depreciated amid the parallel market by about 24%, by about 30% year on year, till today, last year to today. And what that means is that the pass-through of 83% means about 24% pass-through to prices. And that's why you see inflation at about 23%, right? And that pressure will continue. For the imports, of course, this is an import-dependent economy. That's going to be two effects simultaneously. One is quantity effect, and number 2 is price effect. If the exchange rate of naira to dollar is 500, and I have 1 million naira to import, I can import about 2,000 units of a commodity. If it becomes 1,000, I can only import 1,000 units of a commodity. That reduces the quantity available. But not only that, it doubles the price also for that commodity. Yes. And so that price, I can pass 100% or less than 100% of that price to the consumer, depending on the elasticity of that product. So if it's a commodity that is more elastic, I can not pass all of that because consumers will leave. So I take part of that burden and push onto the consumer. So I'm affected. And that's squeeze margin for me. All right, for the consumer, that is squeeze income for consumers. And
so on both sides, everybody's squeezed.
But even the economy, because when the inflation is high, you see capital flight. You see people looking for safe haven, people putting their money into dollars and gold and all of that. And you see that currently there's hoarding of dollars, right? Because of uncertainty within the economy. People and a lot of persons that have hoarded dollars outside the banking system are not yet to bring it out. Because one, they don't know what next. Where's Nigeria going? So uncertainty.
But again, let's talk about inflation forecast, 23.35% for the month of July. What at FDC, why do you think folks will arrive at this number as a headline figure?
Yeah, you know, normally we do our survey within the Lagos metropolis and then use our models to estimate what we think the inflation will be in the coming days. And for this number, 23.35, we are seeing one is the policy reform effect, especially for subsidy, which has trickled down a whole lot of cost increases due to logistics and all of that, because it has a larger spillover effect. But we're also seeing legacy factors, right? First of all, let me play something for you. Money supply. If you look at 2019 till date, money supply has grown by average of 11% year-on-year every month, 14% year-on-year every month. But the GDP had grown by only average of 2%. It means that if you have 14 people with 1,000 naira to buy a commodity, and then you have a seller with only 2 units of that commodity, and then these 14 people with 14,000 are competing for that 2 units of a commodity. So if that commodity is 500, I can't sell it 500.
You gotta move it up.
It has to move up. So you see the money in the United States, the restrictive monetary policy campaign, money supply growth is in the negative. It's been in the negative since last year. In Nigeria, last month, it was even about 33% year-on-year. Ghana is 45%, and you see Ghana inflation at 43%. Yeah. So once your money supply is not matching with productivity in the economy, expect inflation. You can't avoid it.
So your money supply, your currency, whatever it is not flowing into productivity?
It's not flowing into productive use. So you're going to see higher.
It's a bit of a hot air.
Of course, exactly. And that is what you see that is playing out. And it's quite unfortunate that the mechanisms are quite weak. I think
mechanisms for productivity?
No, for monetary policy effectiveness. Okay. The transmission is quite weak, and so you see central bank raising interest rate, and we're not seeing it reflecting. You can't raise interest rate and money supply growing at the same time. So
when central bank raises interest rate, what do we expect to see on the fiscal side to happen?
No, it's good you're asking this question, because that has been the biggest problem. Like last year, we raising rates and then increasing expanding the fiscal corridor. Yes. It's just like you are driving and you're matching brake and you're matching accelerator at the same time. That's chaotic.
I don't want to think about the consequences.
That is why we didn't get any outcome. There must be coordination. We must say this is where we want to be. Is price stability a priority? If we define it as a priority, we must focus on it, focus on achieving it coordinatedly, both the fiscal and the monetary side. And so that coordination has to be there. We are lacking that coordination. We have fiscal rascality, where you see debt monetization all over the places. If you monetize debt today, in the next 6 to 1 year, you will still feel the impact. It doesn't just die off.
No, it doesn't. No, it's a genie in the bottle. It's not dead. It's just waiting for you to remove it, to move it up.
But
let's talk about how all of this, the exchange rate, inflation, and all that, play into the foreign investors' space, as we want more foreign investors to come in, whether it's for the direct investment or for portfolio as well. Where does that leave us right now? Where are we hanging based on the current exchange rate we're seeing and inflation outlook, at least from FTC, of 23.35 for July?
it's not really a good indicator for the
foreign investors.
Foreign investors, because those are the two critical things for foreign investors. The foreign investor wants exchange rate to be stable. Because if we're saying that the net return is negative of about 12%, right? What it means is that I lose 12% of my money by investing it in Nigeria to earn interest rate of 9.8%, right? So I can't do that kind of investment, right? And remember that the risk premium in Nigeria is very high. And so if you have low interest rate where you have high risk premium, you understand? Yes. It means that there is nothing appealing for me to bring in my funds. So that's a very big problem. On the other side, exchange, if I bring in my money, when exchange rate is 500, and then I invest it, convert it to Naira, and then by the time I'm pulling it out, it's now 1,000. I'm losing the entire thing I brought in. So I don't want to do that kind of business. So exchange rate stability is key. So when we say exchange rate stability, do you think it's being misconstrued on the streets to mean low level of exchange rate? Of course.
Try to clear this out very well to understand, because what is a stable exchange rate against what you can call a good strong exchange rate,
strong currency.
Can you achieve the two like that?
You can achieve the two, but one is a priority. What is most important is stable exchange rate, not strong.
At whatever price it is.
Or whatever price it is. The Indonesian currency to dollar is about 15,000 Indonesian currency to dollar, and the export is more than 5 times our own.
But because the rupee is stable.
If the Naira settles at 1,000, can I make a projection that in the next 6 months, I'm going to do this investment and I'm going to realize the exchange rate will be within this band, and I realize it?
What do you think the band
That's
should
what the
be?
market wants.
Should be 1,010, 1,005, or should there be a corridor? Now we're looking at almost 200 Naira dollar.
Exchange rate is not something you just assign a number. It's a market dynamics.
But again, you're talking a plus or minus.
The PPP, our PPP value is reading 719, meaning that currently exchange rate is undervalued by about 6.8%, right? But because the dynamics are not right, a lot of things are not right in the basket. And of course, you know, today there's no substantive central bank governor, right? Today there are no cabinets, right? So decision making begin to delay. And there are so much uncertainties in the air. Nigeria wants to strike in Niger, or they don't want to strike in Niger. And people are watching what is going to happen.
Investors don't seem to like that.
Of course, there's capital flight. What is happening in the parallel market? Because there is a lot of demand for dollar in the parallel market. Remember that the official market, liberalized, but we still have a whole lot of constraints.
We have legacy unpaid.
Unpaid.
Yes,
that's backlog.
Yes.
All right. So much demand out there. And investors are taking their money out, right? Apart from the capital flight, don't forget, because, you know, one of the things that happen within this policy corridor is for you to have a projection of demand, right? You know that this is summer period, so you're going to have holiday demand, you're going to have school fees, payment demand, and travel and all of that. These things have to be factored into the policy basket, knowing that within this time we need to increase supply to meet this demand.
Of FX.
And that is not there. And so a lot of that demand is going to the parallel market, and that is pushing up the price. That's
where it's coming from. So it looks like the parallel market, I don't want to use black market, but parallel market seemed to be a little bit quiet from May when the announcement was made.
Exactly.
And now it's getting to that season. It's beginning to raise ugly head.
Exactly.
So that's what we're getting about 9:10, 9:15 right now.
Even in Kano, it was 9:25 yesterday.
9:25?
Exactly.
In Kano? On the street?
On the street.
And we're not yet. We're not even in September.
We're not in September
yet. Which is the peak period.
The peak of
September
the summer.
To October.
Exactly. So there's much more to it. The central bank has to make decision on how much can we intervene in the market. There is a lot of tentativeness within that corridor.
Do you think the central bank has what it takes to intervene in the market right now, considering where our FX reserves is at the moment? I think we're just hanging around a few notches above $30 billion.
Yeah, of course. I think that supply constraint is there, but not all that. I mean, you know, there's a conversation we had before about central bank independence, time consistency problem, all right? Today, if central bank makes an announcement, will people believe it? If you give an interview to a member of Federal Reserve Board, and he said, we think interest rate will go high, the market will adjust. All right? In Nigeria, if the central bank governor makes an announcement, do you think market will adjust? Because you make one announcement that we are going to increase interest rate, and maybe the other levels of government want something different. And then you see all of that. So That is a big problem, and that has to be worked on.
You know, Clement, I don't envy you research analysts these days, because I'm sure when you see the numbers, I'm trying to find out how you manage to sleep at night. But again, it's your job at FTC. Thank you so much. It's nice having you. Have a great Thursday out there. Clement Izu from Financial Derivatives Company Ltd.